Welcome to the LiveSquawk podcast, where professional traders, investors, and market insiders get the unfiltered insights that matter most. Stay ahead of the curve with expert interviews and exclusive market commentary. The 30th, of January 2026. For anyone new to this podcast, every week, myself and the guest break down the key stories of the week gone and look at the implications for the markets. We'll also preview the week ahead, providing you a heads up as to what you should be looking out for. This episode, I'm joined by regular contributor Jamie Dutta, market analyst at PIQ. And before I introduce him, just a couple of just key points here. The content provided on this channel is for informational and educational purposes only. We are not licensed financial advisors, and none of the information shared should be considered as a financial investment or trading advice. Please conduct your own research, consider your financial objectives, and consult a qualified financial professional before making any investment decisions. Investing and trading in financial markets carries risks, and past performance is not indicative of future results. We're not responsible for any losses or gains that may result from following the content on this channel. And with that, I'd like to bring in Jamie. Jamie, how are you?
I'm very well, Harry. Very well. Pleasure to be here as always. And really appreciate you inviting me back on.
Well, it's a pleasure to have you. It's been quite a full week, if we want to be polite about things, and especially after the week before. And so we'll dive straight in. I guess the headline for this week was the FOMC rate decision. In itself, the decision wasn't that stunning, but there was enough out of it to move markets around. So on Wednesday this week, the US Fed Reserve followed through on expectations, holding interest rates within its Fed funds target range of 3.5% to 3.75%. The routine announcement threw up only a few changes to the communique, but the minor changes put a hawkish slant to what was expected to be a dovish hold. What did you make of the Fed? What are the key features for you on this week's Fed decision?
Yeah, I think, it was pretty balanced for me. It was positive. Was it hawkish? I'm not sure. Markets barely moved really. Maybe a basis point for the December pricing, maybe sort of 45 basis points instead of 46 type thing. So yeah, positive because obviously the economic outlook, what we're seeing at the moment is solid. Obviously no firm guidance and still data dependent, meeting by meeting. And then on the inflation and employment side, I guess inflation, still elevated, but probably that overshoot due to tariffs on goods. That's meant to be one-off. Well, there's disinflation in the services category. I guess employment is what you're hinting at with the hawkish side. Unless you saw something I missed, Harry.
No, maybe the hawkish is the wrong word. I mean, what I think was everyone was looking for a dovish hold, and what happened was I think people, because the statement really looked on to the labour component, which they have done. To be fair, that's what they've judged or based their decisions on. I think there was a small disappointment, and I think we maybe saw that in some of the reaction the day after, in terms of what we've seen from Bitcoin's drop. Although there may be other mitigating factors there, and also the equity moves that we've seen in combination with other things happening at the moment this week. There tended to be just a pullback, I think, in risk assets on that front. So, and my take was that some of that, if not all of it, was attributable to the Fed decision and the language, I think, more than anything else.
Yeah,
I don't think we've taken out cuts yet for this year.
No, exactly. I think we've gone back to sort of 47 basis points or so for the year. When I last looked, I think, that labour market sort of tweaked to the language, right, is what grabbed the headlines. And we'll probably get onto non-farm payrolls. But I mean, labour market stabilisation for me, is quite interesting, right? If you've got labour supply and demand basically cancelling each other out, then that doesn't really address the fact that non-farm payrolls have been going down in the last 6 months. So that affects or impacts on income growth, really. And then you see downside risk to consumption. So, I think the other point about that is unemployment dropped by 0.1% last time around. But then the confidence intervals around that is very questionable, right? So, and still that level was the highest level we've seen since COVID. And if you then take that out, or before then it was the highest since 2017. I know historically it's not that high; it's still a 4 print, but then tallied with the sort of 3-month non-farm payroll average, then and what Powell said about 60,000 number, then you've got job losses. So yeah, I just question that labour market stabilisation a little bit. I know some economists are doing similar,
Mm.
but yeah, otherwise, it was all fairly balanced, but with that positive slant.
Yeah, I mean, just to give everyone the exact quote, it says they removed the language that said the downside risk to employment had increased, indicating that the commodity no longer saw risks, rising risk to employment. And they said labour market description was softened from having slowed to remained low, and unemployment was updated to show signs of stabilisation. So yeah, I mean, there are areas there that you could say, I guess, yeah, hawkish was maybe too strong a word, less dovish than maybe some had initially thought.
Yep,
Um, we'll move on because that
it's done.
backward looking.
Yep,
But what we've had since then is the US President Donald Trump nominate his next Fed chairman once Powell's term ends, which I think is in.
May.
He has his last meeting in April,
Yep,
but
yep.
yeah, his term
We've got
actually.
2 left, right?
May.
Yeah.
That's right.
Yep.
Yeah, and they've announced Fed's Walsh as the new Fed chair, pending um, Congress approval. What are your views on Walsh? I mean, obviously, you've seen my point here. Appointment seeing good for the US dollar, which is a note from ING. I think it was Rabobank or ING. I'll get that the report. What are your views on it?
Yeah, on him. I think ING. I think they said most market friendly, didn't they? I think. And in terms of he's a former Fed governor, so he knows obviously the ropes. He is market friendly in the fact that, well, I think he's keen that the appointment really sort of gets rid of a little bit of nervousness around the politicization of the role, obviously Fed chair, and somebody obviously who was potentially going to be much more dovish than him. So that sort of gets rid of that nervousness, if you like, and that's why we've seen the dollar bid as well. Um, yeah. What else? He is more orthodox, as I said, than some of the others as well. So that helps with the initial sort of reaction. I think he shares some of Besant's views that
Yeah,
the Fed, has sort of, in his view, gone beyond their original remit. And really, they've sort of blurred the line slightly, I guess, between some sort of fiscal and monetary issues, and then sort of going on to his sort of big thing about his hawkish views around balance sheet, reduction, which is one of his aims by all accounts. It's kind of interesting that cutting down, the balance sheet to
well, just
sort of
one
crowd.
second. 2 secs. So yeah, just to give you a bit of perspective from this is nationwide. Um, is it Kathy Bostoniak says Trump
Okay,
has settled down on Kevin Walsh to be nominee. Walsh was won favour with President Trump since last year when he became a vocal critic of the Fed Reserve, arguing that interest rates should be lower. Um, says our view remains that we look for the FOMC to hold the policy rate steady until June, and by then inflation should peak and the labour market lag. Um, Providing reason for the Fed to resume rate cuts. We forecast a total of 50 basis points in rate reductions from June through to year end. Elsewhere, we've heard people saying it's just that he's a safe pair of hands, a relatively safe choice. That was from Capital Economics. And like you say, ING also, I said it was probably one of the better outcomes, really, for the next Fed chairman. So, on that note, then, it's as you were. Maybe not great for those intraday traders that want a bit of volatility, but what we've seen is probably the wisest choice that the administration could make. Yeah, moving on then. We saw Bank of Canada interest rate announcement. That was as expected. We'll go over that. Eurozone Q4 GDP was out this week as well, and we saw a bit of a surprise strength there, and more of a surprise because it was more broad based. Really, France aside, we saw better numbers, I think, for a number of the main constituents of the Eurozone economy. And it, as I said, it was more broad based. Did you make anything of today's announcement?
The GDP.
Oh, yes.
Yeah, not too much. I mean, there's so much attention elsewhere, to be honest, and I think it's
Yeah.
backward-looking data anyway. We're eyes on the ECB, although we'll get to that. Won't be very eventful. And then I think we've had some inflation numbers, haven't we? Which slightly stronger than expected. So yeah, not too much to look at for me on the GDP front.
Okay, cool. I may have got that wrong. Was it inflation rather than GDP? I think GDP is,
Today, I thought yeah, well, I was looking at the inflation figures, so
it
I
was
just
inflation. I
presumed.
put it's been written
Yeah,
down as GDP, but inflation data. So that was
yeah,
on the surprise to the upside. But
yes,
nothing really to phase the ECB going into next
no,
week's
no. I
decision.
think Spain and Germany were a bit higher in January. Yeah,
That's the one.
exactly.
Yeah.
Yeah,
And I think
yeah.
Portugal also showed um, a bit of strength there as well in terms of
Uh,
prices, but nothing I
Okay,
think overly concerning. Um,
no,
just a final piece here,
really,
geopolitical risk.
yes,
Iran's still in the spotlight. Going into a weekend,
yes,
as we are,
exactly. You're
you know,
going to say what I'm thinking, aren't you? Modus
go on.
operandi of President Trump.
Yes.
How many consecutive weekends have we had something go on? Is that what you're going to say? Have I killed it for you, Gary?
No, 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 no. Well, yes, but no, because it does lead on to onto that very matter. I mean, every weekend, seemingly, we've had some new development come through on the geopolitical front that's caused consternation or relief. Um, and this weekend is no different. Obviously, there's an armada heading towards the um, Middle East, and in terms of Trump wanting to show his strength to the Iranians regime, the IRGC.
Yep,
Um, how would you, if you were trading, how would you
I am. Yeah.
look at, well, as you're trading, if you're not trading right now, if you're trading, what are you looking out for, and how do you protect yourself?
I mean, I think, you know, not stating the obvious here, but taco, whatever you want to call it,
Mm,
um, is what you play for, right? So, yeah, the beautiful Armada is on his way. The chances of him using that, I know some people that I've spoken to who have sort of more knowledge than I do about that kind of thing, military maneuvers, think it's happening. I kind of think oil, Brent at $70. Is that where we go, and any sort of pullback then with what 1.5 million barrels a day of Iranian oil, but then the Strait of Hormuz is probably the issue with the 20 million barrels a day. I kind of yeah, I'm waiting for a pullback at some point. So, and especially with oil, with the scale of expected oil surplus, then we would see a pretty sharp pullback. Yeah, in crude, I would say. I think the average, at the moment, forecast is around sort of 58, $60 or so through this year. So at the moment, I would just expect to see some sort of um, agreement or supposed deal being done, and things calm down.
okay.
We haven't really had, and with that, I guess the last time we saw it, obviously with Greenland, 2% off the S&P, and then we bounced. So I don't know whether that's not really the gauge now, but maybe it's less than obviously what we saw on Liberation Day, and that's a sort of playbook potentially for these type of things, especially over the weekend. Yeah,
Yeah, well, anyone missing out on the news that the Strait of Hormuz story element of that is that Iran yesterday said they were going to be doing some live
yeah,
um, drills. They planned live fire drill in the Strait of Hormuz, and now anyone who knows the Strait of Hormuz, it's a very key transport gateway
yeah,
for much of the globe's goods, and so having to navigate that
yeah.
in tense times is obviously why we've seen oil. We saw oil move slightly higher yesterday on the back of that proclamation by the Iranian Guard,
And
and
And they're
to
as good
scratch
as
that,
Trump, aren't they? Sorry, Harry. They're as
yeah,
good
go on.
as Trump at saying, death to all people, and it's the end of, it's the end of the world type thing. So again, I know they've said exactly what you said with that military exercise, but yeah, again, headlines and what they say and what they actually do are very different normally, aren't they?
Yeah, but again, you have to go after it, I guess, in some way, shape, or form, in case things do take a turn. But you'd like to think that this is all showmanship, bit on both
Yeah.
sides, really,
Yeah.
before we get into any actual bad stuff. Hopefully.
Yep.
So we'll keep an eye on that. Right, and that leads us into the week ahead, really, because that is something that will be on the minds of many investors and traders over the weekend and into the start of next week. But next week is headed up by the non-farm payroll. We've sort of skirted on it with the labour market report. So we've got US non-farm payroll next Friday. Um, can you trust the data? Will you be able to trust the data for January, or do you think there should be maybe another month or two before we actually get back to um, not having the distortions that we've seen before?
Well, yeah, it's a very good point because I think you've got weather issues as well, right? And whether they're going to impact this data or probably January's data for next month, I
Mm,
guess. So there's that issue, and then just trusting the data anyway. Like we said before, with Powell saying the BLS is overstating job growth by that 60,000 number per month, then yeah, probably skeptical, I guess. We sort of talked about that unemployment rate as well and stabilization. It's probably the same thing we're going to get again, right? It's a sort of low hire, low fire, economy, which is, the headline has stalled over the past 6 months. We've said about the sort of 3 month average. I think it's around 22K now. But we're expecting what 70K for the headline, and unemployment around 4.4, so pretty much unchanged. Um, so yeah, more of the same, really, in a way. There's that short-term weakness,
mm.
and potentially we're sort of susceptible to, a downside surprise, maybe, and especially where the dollar is. Having sort of collapsed and sort of being bought slightly today, but collapsed over the week in the last, few days at least. So, um, if we get an upside surprise, will that help things? Probably we'll look through that, and people may question the data. But I think then, sort of symmetrically, then a downside surprise would see a bigger reaction.
So yeah, and I think that sometimes the pollsters put another survey out before, I think
Yep.
before Wednesday, so we may well see slight adjustments to the current estimates for that, or especially we'll get ADP on Wednesday as well,
Yep.
private payrolls report,
Yep.
and
And
some
job vacancies as well, right? Sorry,
yes,
jolts as well on
jobs.
Tuesday. Yeah.
So there is some adjustment potentially to be made ahead of Friday, well ahead of the last poll for non-farm, and
Yep.
that should read US December non-farm rather than Jan. It's in January, but obviously it's December. So like looking back, we've got an interest rate decision week from a number of key central banks. We'll look at ECB now. Obviously, we saw the inflation. I'm getting this all wrong. I think I thought we had inflation next week, but maybe I'm wrong. Anyway, let's take a look at the ECB
No,
interest
we
rate.
we do have inflation on Wednesday. We
Yes, we
do
do.
in the
Yeah.
Eurozone. Yeah. Yep.
Yes. So in terms of the ECB, this is no big surprise that we're not going to get any change out of them. But we've seen the euro, and that's started to cause a bit of consternation amongst senior officials around Europe on its strength, really. Um, it's probably too early to have an impact at the moment. It has to be more sustained. But any views on the euro and its impact on central
Yep.
bank thinking?
Yeah, very little, I'd say at this point in time. I think 120, supposed line in the sand, isn't it, in euro dollar? If you look at the broader sort of measure of the euro, the sort of nominal effective exchange rate, that's only sort of 0.2% higher than versus the December meeting. It's a little bit higher versus the sort of cutoff date for staff projections and that sort of thing, forecast about 1%. But you need a much bigger move for then to really impact inflation. I think I can't remember, one of the banks said it's 0.1% lower in the December inflation forecast if we're around 120. That's not very significant. And really, I don't think it's going to impact at all. I don't think President Lagarde will say anything at all about it, or just be very neutral. At best, I would say. So yeah, not a sort of major impact from the euro, even though obviously, like you said, some of the doves have been, you know, on the wires just talking about it, impacting
Mm.
inflation at some point. I think also you've got to remember as well, inflation expectations, they're pretty steady. So despite the euro moving higher, they're pretty steady. And in actual fact, when you get the dollar moving lower, you get an easing of global financial conditions anyway. So yeah, not too much to say there. But you're probably right. It's the only thing that will or could be exciting at the meeting, because otherwise it's all going to be fairly tick box and nothing to see here. Let's move on to the next economic projections that we get actually in the next meeting, I think.
Which is how central banks like it. They don't. They want
Yeah.
sterling.
Well, it's
Well,
it's
dollars.
it's crazy. One of the banks I think said, I can't remember. I think it was a beacon of continuity, the ECB. And you remember the days where we would laugh and think they were way behind the curve a lot of the time,
Yeah.
and yet now we're in this position, and we're talking about other central banks as well, all being in that position, which is kind of slightly eerie, isn't it? I think, in some ways, because we've not had this for a very, very long time, I don't think. So,
Well, it's group
it's
thinking of that, which I find dangerous for central banks, and that they all says,
exactly that. Yeah,
it's not
exactly
great.
that. Yeah, it's like range contraction for a long period of time, and then you get a massive bout of range expansion,
Mm.
and a huge breakout. So, yeah, it sort of feels like that a little bit. Hopefully not, but well, hopefully, yeah, because otherwise we won't see much from a lot of central banks, right, for the first half at least of this year.
Well, we're in
Apart
a
from
global
one. Apart from
economy.
one. Yes.
Yeah, apart from
Go on.
one, but we're in a global economy, and I guess the one does affect the other, and therefore there is a knock-on effect,
Yep.
more so than maybe in the past, that keeps them aligned a lot of the time. But yeah, I'd say more than one. Bank of England is also due to report next Thursday. They're expected to keep rates on hold as well. I've got a note here from Capital Economics that says stronger pound helpful for BOE, but rising oil prices a risk. And it says that while the pound's recent appreciation against the dollar doesn't materially change the outlook for CPI, the Bank of England will become a bit more disinflationary, will welcome a bit more disinflationary pressure. But one risk is bigger rise in oil prices prevents interest rates from falling from the
Yep.
3.75% to 3% this year, as they expect. And just a note here also, I think it was from Bank of America Merrill Lynch. Can I still say that? Or BOA now? They say BOE is likely on hold. We still think the door is open for a March cut, pending wage signals in the agent's survey.
Yep.
What do you view the Bank of England at the moment? How do you view the Bank of England at the moment?
Yeah, sitting on their hands, really, aren't they? From what we had was a sort of move every other meeting, wasn't it? Sort of
Mm.
signaled. Now we're not really getting that. They want to see more disinflation. We might not get that. So I think potentially they're a little bit scarred from the energy price shock a few years ago, and then we obviously had the food inflation rise last year as well, and they were pretty hawkish with that as well. So they're probably mindful of that. Maybe we see something on the vote. Is it 8-1 or is it no? Sorry, not 8-1. Is it 7-2 or 6-3? And if Ramsden, votes for a cut, then a little bit dovish maybe. And then Bailey opens the door for a March cut. Unlikely. But I guess that vote is probably the
He's the
most
pivot.
interesting thing.
I think
Sorry.
he's the pivot. He was the pivot last time. I
Yes.
think some suggest he will be the pivot again if they do go in March. But it
Yep.
is a very contested NPC at the moment in terms of the divided NPC, should I say,
Yep.
in terms of the viewpoint for the members. So
Yep.
one to keep an eye on, because I think the voting pattern will be the most interesting part
Yes.
of this thing.
And I think there's around, yeah, sorry, Harry, there's around a
Mhm.
20% chance of a March cut. So,
Mm.
room there potentially if that vote is sort of 6-3.
Yeah, absolutely.
Yeah.
We have RBA. They're also due to announce, and we are looking for a move from the Reserve Bank of Australia, and I think we're looking for a hike from them. So, listen, I don't expect you. I don't suppose you trade much Aussie, but any sort of just surface views on what to expect.
Well, to be honest, the Aussie's been very exciting because it's been stuck in a range, or was,
Mm.
back end of last year, disappointed loads of people trying to be long it and nothing happened. And then, towards the end, well, start of this year, really, where we're up around 67, this is Aussie against the dollar, then, again, tracking sideways, big move, sort of in line with the previous uptrend, and then we've obviously exploded and gone towards above 70. We were, and we're approaching that again. Expectations obviously of the hike, really, and just two sides to it again. Inflation, services, and housing inflation data has been persistently high, sort of above that 2 to 3% RBA target range. And then the labour market as well, sort of underlying resilience in the labour market, especially with, some of the job detail as well. I think full-time employment there, and unemployment sort of down. I think
4.1%.
yeah, I think so. Exactly that. Yeah. And that fell in December to that level for 4.3. So, yeah, that fourth quarter average, I think, just looking at it, is 4.25. So below the RBA's projection of 4.4. And obviously, that's why we've seen this big jump higher. Obviously, helped with the dollar weakening as well, plus Aussie
Yeah.
strength, and it's outperformed all its major peers, I think, this year at least. So
Is that
no, it's definitely
is that
been
based on the
interesting.
commodity? Sorry to cut across. Was that obviously based on the commodity moves that we've seen?
Yeah. Yeah, no, so a sort of not a perfect storm, but yeah, you've got domestic rate hikes, you've got commodities obviously surging, and then dollar, collapsing really over the last few days until today, all helping. Yeah, that major definitely. And I think, yeah, there's about 65% chance of that hike in February, and then about 50 basis points in total up to about August, I think. I just looked. So, yeah, no, it's been an interesting market, Aussie, definitely, and something to watch. As I said, not all central banks are the same, RBA being exactly that.
But it is the other side of the world. Just a quick note here from HSBC on the RBA. They say while a pullback in fiscal policy could assist with disinflation, fiscal policy appears stimulatory, and so monetary tightening is likely to be needed for the RBA to credibly forecast that inflation will fall to sustainably back down to the 2.5% annual read. Their central case is for a 25 basis point hike in February. So that's for the RBA. That would bring their rate from 3.6% to 3.85%, just for the record.
Yeah.
We were going to discuss the government shutdown. I think there's been a bit of movement on that to the point where um, the probability of a full shutdown is now less likely, but still, they're putting sticking plasters on everything at the moment, and it's an evolving story as we record this at the moment. So without trying to make ourselves look like idiots, we'll leave that for the time being. But again, it just shows the division amongst the on Capitol Hill, and just the stubbornness. It's not helped by what we've seen in the past couple of weeks in sort of Minnesota and everything that's gone on there, really, and it's just entrenched the two sides. Would that be fair?
Yeah, no, that's exactly it. I think, yeah, it's all about ICE funding, isn't it? I think, which is the sticking
Mm.
point for the Democrats, and why I think they've agreed on mostly the bill, but not then the funding for that area.
Yeah.
I think the Department of Homeland Security, I think, which incorporates in ICE, I think. So, yeah, that's the bone of contention, which, yeah, hopefully won't cause a mass shutdown, I guess.
No, I think, and it's actually Lindsey Graham, who's a Republican,
Okay.
um, who's been a bit of a thorn in the government side on this
Yeah.
one, Republican side on this one. So one to watch on that front. We're at the end of our episode now, so I'd like to thank you for your participation. Thank you, Jamie. Jamie Dussel, PIQ.
Thank you, Harry. Always a pleasure, as I say. And yeah, appreciate you inviting me on for sure.
No, love to have you on. And thank you everyone for listening. Anyone who missed the start of this program, please go back and you can listen to it on all the sort of social media channels, X and YouTube and Blue Sky. And we'll also put the recording up on the podcast platforms as well, Apple iTunes and Amazon Music, amongst others as well, Spotify. You'll find it there too. So yes, please have a listen back. And hopefully it's been of some use for you guys heading into the weekends. You know what's what to look out for the week ahead. Thank you again then, Jamie. Thank you guys for listening, and we'll see you again next week. Oh yeah, by the way, there will be a preview of the ECB and Bank of England rate decisions coming up midweek as well. So keep an ear out for that. Thanks for tuning into the LiveSquawk podcast. Your edge in the market starts here. Subscribe now.